Hey everybody, Lance Bell here of Lance's Car Life. Hey, I've been talking about this for a while, so I'm finally going to do the video. Now this is going to be a bad credit buying handbook. Now I'm going to break this up in a couple of parts only because this is going to be it can be way too long of a video. So you like this video, please like, share, subscribe, all those good things, and we're going to go over this with you. Now, I get it, guys. Bad things happen to really good people. I've been doing the subprime my entire career, so I get it. But I see what goes on out there when buying a vehicle, and you can talk to these so-called experts, but this is coming from somebody who's actually currently in the industry, and I want to help you out. Now, you have to understand something, and this is from the lender standpoint. I'm keep looking over here because my notes are off to the side. Now, you have to understand from the lender standpoint. They look at you as obviously high risk. I mean, this is what it is. Now, I don't want to sit here and tell you, hey, you can get great rates, things like that, but the answer to that is obviously no. I mean, being a risk, what you're going to pay back is going to be higher. It's just what it is. I mean, not having the greatest credit in the world is not going to qualify you for prime interest rates right now. Now, with anything, you override it with cash because it's a loan just like a mortgage. However, I'm going to keep this very simple as possible. Now, understand something. When you look at a vehicle, let's say you're ready to go out, find your vehicle, you got an idea of what you want. Now, first things first, this is what the lenders generally look for. They want you to purchase a vehicle, that's normally 5 years or newer with less than 65,000 miles. And that's what a huge mistake a lot of people get into. And I'm talking about from a dealership standpoint. I'll get the buy here, pay here in a moment. Now, they're looking at it, and what they call it mitigation of risk. Now, I know a lot of people will like, well, I can get something cheaper, a lot easier financed. And the answer to that particular statement is not necessarily. Here's the reason why. Now, there are lenders out there that will finance an older vehicle, higher miles, but those are also the highest risk vehicles. Just like I just said, is mitigation of risk. So you have to understand it from that point. Now, understand this also. Like I said earlier also, they would like you to have some money to put down. Now, if anything, the majority of lenders, like any loan, car loan, they would at least want you to have your tax, title, and license down. Sounds simple enough, but I understand what's going on. I mean, can you get something done with $500, $1,000? Sure, I do it every day. But they want you to be participating in this loan also. And I know it's tough, but this is what they look for. And also, I see this all the time in subprime. You have to understand something, folks. You can't be picky on a specific vehicle. Let me explain. Now, some people, they just want, let's say, I'm going to use a car as my example. I mean, as long as you keep an open mind, you'll be okay because nobody's asking you to keep this vehicle 6, 7 years. I mean, the vehicles that in the subprime world, they just want you to designed to get you back going, get your credit back where it needs to be. Because somebody like me, I want you to call me back in 3, 4 years, say, hey, Lance, get me out of this. The mistake I see, and I hate to say this is going to sound really bad, is that I get people all the time to say, I want what I want, therefore I'm not interested. Let me understand something. The game does not work that way. Now, you can get what you want, but the lenders are going to require a lot of money down. I mean, just what it is. And that's why I said in these situations, you really can't be picky. Especially as far as the lender's guidelines, you have to understand this also. They look at it from your budget. And let me explain. Let's say, for instance, let me look at my notes here. You make $2,500 a month. And this is gross income, not net. This is gross. A lot of lenders will base off your gross monthly income. So let's say, for instance, you make $2,500 a month. Now, a lot of lenders, they're going to base a car payment on any vehicle at 15% of that, which is $375 a month. And this is assuming you have $1,000 down. So from my standpoint, I have to find a vehicle that matches that qualification with your money down. It's not me picking out the vehicle for you. It's the fact that the lenders themselves say, okay, we have you qualified, but here's what you're qualified for. And there's a lot more nuance in that, and I get that, but that's more of the layman's terms and what a lender looks for. Now, I'm going to keep this video short because this is going to be modular 1. Now, if you like the video, let me know. Please like, share, subscribe. If you got questions below, please let me know. Now, I'll be back here hopefully a week from now with modular 2 when I go a little bit more in depth. Well, I'd like to thank you for watching, and this is Lance of Lance's Car Life.